But as promised, let's get chatting with the management of Greenply Industries. The performance was, rather mixed or relatively good. They have commenced their MDF operations as well. Well, to find out about what's the outlook from here on, Mr. Manoj Tulsian, the joint MD and CEO of the company, joins us on the show. Hi, sir. Good morning, and thanks a lot for joining in. Well, I want to focus on the MDF part of the business itself. What can you guide for on this business in terms of volumes? I think last year you did around 125,000. For this year, what could it be on revenues as well as on the margin front? Please go ahead.
Hi, Nigel. First of all, good morning, and thank you for having me on the show. It's always a pleasure meeting you. In terms of MDF volume, this year we are targeting to touch anything beyond 200,000 CBM. And the subsequent year also, then we can build up almost a 20 to 25% volume growth on the same.
Okay. And margins on it, what will it be? Mid-teens?
So margins is only going to move up, because it was the first year of operations, and as we maintain that it takes some time to get the operating efficiencies. So if you really see on a quarter basis, we are improving on our margins. I think for the full year, this fiscal, we should be in upward of 16%. And the year subsequent, we can further improve that by around 2 to 3% for sure.
Okay. Manoj, hi, good morning, and thank you for joining us. On the plywood business, what kind of growth are you hoping to see in FY25? What are the realizations looking like? Can you build on to them this year?
In terms of growth, last year also we maintained around, anything between 8 to 10% volume growth. We ended up somewhere around 8.6% as a volume growth. We don't have industry data to really understand that, how the plywood market is behaving. But I'm assuming for all the recognized players and the branded good players, there is a good market, good traction, going forward, and all the type of reform measures which is happening is only going to help players like us. So at this point of time, I maintain, anything between 8 to 10% as a volume growth. In terms of margin, for sure, I think, we have hit a rock bottom. Last full year, if you truly see, it was very difficult to pass on the raw material price increase to the market. But I think the market has more and more, with a time lag of 4 to 5 quarters, they have been able to absorb that. And we are strategically looking at, increasing or correcting prices in various markets. Coupled with that, I think, if we are also concentrating on improving our sales on the premium segment. If that also happens, then for sure the margins will improve.
So you're saying margins have hit a bottom in the plywood business and they'll improve going forward. So what are you looking at? By when do you think you can get back to double-digit margins? Will it be in this year itself, FY25?
I think, Sonia, this year I'm not very sure, whether it will go to double-digit. Yes, internally we are taking that as a target, but it's too early to say. But for the next year, for sure, I feel, 10% margin plus is something in this business is doable and sustainable also. So, and we will only be inching up. Also, what happened is last 1 year, if you really see, we increased our ad expenses. It has almost gone up on the same period basis by 1.1%. So that is something also which will slightly taper down, not my absolute investment. But now that I have a new line of business, there will be some amount of ad expense apportioned over MDF also. So my overall ad spend will not come down, but maybe as a percentage, I may get around 0.5% of benefit there also.
Okay. And ad spends is roughly now it's around 3.5% of your total sales?
True. Yes.
3.5%. You're saying it will continue to get maintained at these levels, right?
Well, yes, 3 to 4%, Nigel, is the type of investment what we look at, because it's a brand and we have been doing extension, like we added MDF. Now we are getting into hardware business. Maybe we'll add more line of business. So 3 to 4% of sales is something which we will continue to do as a brand investment.
Okay. Give us a few more details, besides the operational performance. What is the debt reduction plan that you have in this year? As of the last year, I think it was around 500 crores. So clarify on that. And what about the working capital days? Where does it stabilize it? It's been in this vicinity of around 35 to 45 days.
So on the debt side, Nigel, if you really look at last year, we also had our Africa facility, which along with my India business resulted into a total debt of close to around 725 to 750 crores. And in the last quarter, we have been able to hive off 51% of that to new set of investors. By virtue of that, we have been able to get rid of that portion of the debt. So the debt on a steady state for the Indian business, including MDF at the console level, is now close to around 500 crores. Given that we have capex investment of 70 to 80 crores during this year also, I am assuming that this 500 crores will reduce by 10% by the year end. It should come down to 450. That gives us a very healthy debt equity of close to around 0.55, from our existing 0.7. And going forward also incrementally, I think, we will see improving trend of reduction in debt.
Okay, one final question. So 10% reduction in debt, got that. One final question. Working capital days are currently around 47. Any plans to reduce it?
It can come down by maybe 2 to 3 days at best, because in the month of March, we had done some incremental, investment on the raw material side. In terms of the receivable cycle and this, we are already on it. So we don't see much improvement happening there. It can primarily happen on the inventory side, and maybe it can improve by 2 to 3 days for the full year.
Okay, all right, Mr. Tulsian, always good speaking to you. Thank you so much for joining us and speaking to CNBC TV18.